Hi guys, welcome back to the show. Today we're going to talk about the psychological or the mental aspects of going through a recession and the things that go through your mind when you see your stock prices falling. Coming up next, Firefighter's Financial Toolbox. Hey you guys, with the looming threat of a recession, or at least the talk that it's going to happen. Now, first of all, as I've said in the past, nobody can tell when there's going to be a recession. When we have two down quarters, then it's a recession. I'm not saying we're going to have a recession. Nobody knows that until we're in it. But with all the talk that's going out there, and there are some key indicators, as we've talked about in past programs about it, I thought I would talk a little bit about the mental state of mind that people get into in investing when we have a down market or a recession. Now, my personal experience with this was going through the 2008 Great Recession, and I saw my stocks drop by 40%, you guys. So one thing you have to remember, whatever your percentage of stocks is in your portfolio, it could be cut in half. Now, what happens to your mind? Let's look at the mental aspects. Okay, first of all, for most people, if you're a young investor, you've probably only been investing since 2008. So you've seen we've had an over a 10-year market, a bull market of gains and gains and gains. Yes, we've had a couple of small drops, but it was nothing that was very big, and it didn't last. It kept coming back. But what happens when that doesn't happen? When they go down and they keep going down and they keep going down. For most people, the fear of loss is greater than gains they made. Let me explain what I mean by that. If you've been investing for 5 years and every year you've got 5%, so let's say you started with $10,000 and now you've got a portfolio of $50,000. You've seen good times. You've seen some little bumps in the road, yes, but nothing significant. Then a recession comes and you see your portfolio drop by 25%. Now you've dropped from $50,000 down to, let's say, $37,000. You take a big hit, and it doesn't happen overnight most of the time, you guys. It happens over months, and it keeps going down and keeps going down and keeps going down. And you feel like I have to sell because I got to cut my losses. I don't want to lose any more money. Here's the thing, you guys. If you're a long-term investor, if you're buying and holding your stocks, like we preach on this channel, it's gonna come back eventually. We're still buying new stocks because we're still investing continually, right? Even though it's going down. Now we're buying, instead of one stock for $100, we're buying two stocks, that same stock for $100. So we're getting more for our money. As long as we keep investing, it's always come back. Historically, the market has always come back. It's actually an opportunity, but mentally, it's very taxing. You see this number keep going down. You have trouble sleeping at night. You have thoughts of, oh my gosh, what happens if it doesn't come back? I know, it's real. I remember 2008. I remember having these thoughts. It's really easy to talk about, I won't sell, until it actually happens, you guys. It is very hard to get through. Here's what you have to do. When you start seeing those numbers fall, stop looking at your portfolio. Don't remind yourself of how bad they're doing. Just keep investing. If it gets to the point where you can't not look at your portfolio, think about the positives. Every time you look at your share price for that ETF and you see that you used to be buying it for $100, now you're buying it for $75, that's a win. You're still buying the same stocks, you're just buying them on sale. And you have to kind of spin it in your mind. It's not an easy task to do, you guys, but it is necessary. Always buy and hold your stocks. Here's why. It's only a paper loss. Here's what I mean by that. You have your paper, you print it out. Here's your stocks. You have $100,000 in your portfolio. It drops down to $75,000. But it's not real money yet. It's not real money until you sell those stocks. If you sell them at 75,000, yes, you have taken a $25,000 loss. If you write it out as it comes back, remember you're buying it on sale, as the prices start to come back, you're actually going to end up ahead. Now, it may take some time. Recessions don't turn around overnight, but usually they last less than 3 years. So, unless you are a person who is ready to retire in the next year or two or the next few years, you've got time for the recovery. The younger you are, the more you want a recession, because you're buying and holding long term. You're going to buy more stocks on sale and you're going to have more time for them to grow. All right, you guys, I'm no psychologist. I'm not a psychiatrist. I'm not a financial planner. I'm just a guy who wants you to know some of the things that I've personally gone through in a recession and the way that I felt mentally about it, so that you can be informed, so that when you have these same thoughts or doubts about holding onto your stock portfolio, you can talk yourself through it. Watch this video again and say, hey, Brad told me it's going to happen. I'm going to have these feelings. I know it's okay. I just have to buy and hold. I have to wait it out. Time is my friend. All right, you guys, thanks for watching. Give me a thumbs up. If you're new to the channel, please subscribe. It really helps the thing. If you have a comment about it, if you have a personal experience that you went through, say in 2008, leave them in the comments. Tell us, you guys. The community learns when we learn together from past experiences of others. It helps us all be better investors in the long term. All right. Thanks a lot. We'll see you.